All right. Good afternoon, team. Good afternoon. Good afternoon. Hope you're all having an amazing Sunday so far. Good morning, Kevin. Good morning, Mariapan. Good morning, Christopher. Thank you all so much for joining today. Heading into this week, team, we're going to be continuing down on the S&P 500 to potentially fill this gap here at 576, 577, and even potentially touch that level of support, get that level of support test in, and get that level of confluence, pick up a lot of liquidity, and then rebound back up heading into the Trump inauguration on January 20th. Today is January 12th. So heading into this week will be the last week before Trump takes the presidency. And the market could potentially be waiting for that. So if you have been following that narrative over the last couple of weeks, you know that you have been very aware, staying out of these choppy market conditions and even taking good advantage of the market conditions because we have a good sense of what we can expect from the market. So I have been talking about this with the team over the last 2 weeks. And as we can see here, we finally broke down on Friday's session and looks like we're heading towards that 568. So now let's backtrack a little bit and go back to what happened or why we thought this was going to happen. So if you take a look at the prior move there, we drew the prior move and we have been talking about it over the last 2 Sunday meetings. We talked about us getting that rebound back up, printing that sort of bearish engulfing candle and breaking down to that level of support. So the same pattern, believe it or not, so far we have been seeing that exact same pattern there. So pay attention to this particular candle and then pay attention to that particular candle. Then we got this doji right there with that doji above the 20 EMA. And then we have the breakdown candle as we saw there, followed by the breakdown candle. We see a gap down, followed by a gap down. We can see where that goes. So what we would finally like to see is this particular gap here being filled at 576, which has been acting as a prophetic target for the bulls to come down to collect the liquidity and then move back up. So once we fill this gap here at 576, that doesn't mean I'm going to buy right away. I'll assess price action from there, but with the keynote in mind that we are at a great level of support with multiple confluences around 568, where the opportunity can be really great for the future heading into this administration. So if we take a look at the bigger picture here on the weekly chart, this is what we have so far, team. We got a bearish engulfing there. We got a consolidation. And now we have that breakdown candle below the 20 EMA line. So heading into this week, are we going to head down towards 568 support level? That will be really nice. That will be my target. And if I sense any weakness in the market, just as I have been saying, I'm going to continue to confidently short the market, expecting the supply to be overwhelming on the demands, toppling demand and heading lower. So let's go to the 5-minute time frame and take a look at what kind of candles we should expect. So if we do get the moves, if we get any rallies and we get these kind of candles, these they're known as bearish supply candles. If you see these bearish supply candles here, another bearish supply candle, another term is bearish engulfing. Whenever you see these bearish engulfings, you can take a quick trade, make your profit, and pretty much walk away for the day. Here's another one, bearish engulfing. Here's another bearish engulfing that led to some major upside, major downside, another bearish engulfing. So whenever the market is in this kind of condition, you want to wait it out patiently and don't be one of those traders who's going to chase up there. Okay, so I see a lot of traders doing this. They'll get in here right on this red candle thinking that it's going to go down. Now it's all right to enter as an aggressive trade. All right, however, what they lack, what they fail to do is setting a stop loss on their trade, which is where the problem arises. So make sure you do have your stop loss there and you get back in on a reaction, okay? Not on a prediction, but rather on a reaction, especially when you are trading with a downside like that, okay, team? So wait for the candle first and then enter. So in this case, this is a bearish engulfing candle. We short on that one. It's also a good trade because it goes below the 20 EMA line there, and overall just really nice. So it also broke down that level of resistance that bulls had broken down from. That broken up from. So once we got back down below it and showed weakness, the plunge is going to come from there towards that gap fill here, as we saw. But yeah, that's my thoughts on the S&P 500 team. What do you think so far? What are your thoughts before we move on? Do you all agree with me as well? Christopher said, yeah, Kevin, yeah, Little Beast. I think Monday it goes up to 584 and then back down. Very interesting, Little Beast, because that's what Rainbond said as well. Rainbond said that we might get a potential reversal on Monday just to trap the traders. Grab more liquidity to the downside and then flush down. So if that happens and we see that kind of upside, we're going to wait patiently until we get that bearish engulfing, until we get those kind of candles where we will start shorting from again. We can see all those bearish engulfings have provided some really, really great opportunities. And remember, team, this doesn't count as a bearish engulfing, okay? A bearish engulfing is a candle that really engulfs the entire prior candle, as we can see there. It's basically the bears fleeing and running from battle. All right. So keep that in mind. They flee, they run from battle, they save themselves, they save their buying power, while some traders may still remain in the trade. And that's very, very bad because you end up losing you end up losing much more than you thought you would. I think if it does go up, it may be a strong move up with all the trap sellers. I thought about that as well, Christopher, but I just feel like they may not push heading into the Trump. Sorry, 1 week before the Trump, and I think it will rather happen as a reaction heading into the inauguration. And the reason why I say that is because I feel like bulls put in a lot of bears put in a lot of effort to finally break down below this level, and I just think that the gap at this point is much closer than not, and they may as well fill it at 576. Now the question is, are they, once the gap is filled at 576, are we just going to reverse back up immediately, expeditiously right at the test, or are we going to go down to get that high quality retest of the 586 support, strengthening that level of support and then rebounding? Now, the reason why I'm looking for opportunities here, team, is if I go to the bigger time frames here for a second and I show you what's going on the bigger time frame, this is the bullish channel that we are inside of. So the fact that we are inside of this bullish channel heading into a Trump administration where the market can have that hype to feel that it's going to be strong, that optimism, then perhaps this can go on for a while. So this bullish channel here, we're getting close to testing it heading into this upcoming week. So this is why if we do get the sell-off this week, and there's a lot of traders that may be scared, keep in mind that it may be a good opportunity to get in long just in case we do bottom out here and then advance all the way back up to 608 and so forth. So I'm really excited to see what the reaction is going to be right here, because this is a very, very key level. I know that we have a head and shoulders, and I just feel like that itself will be the trap. That will be what will trap a lot of traders, thinking that the market is going to pretty much break the bullet channel there, fire that head and shoulders, and trap a lot of traders. I'm not saying this is going to happen, but and most importantly, I don't want to make any predictions. However, going with the trend at the moment, taking it one day at a time, one candle at a time, one intraday session at a time, observing the price action, it looks like bulls definitely can try and get more downside towards this level. And getting to that level is going to be a very healthy retest with multiple levels of confluence. That's going to be really good. First of all, we're going to get the RSI close to 30%, which is a buy signal. Second of all, we're going to get a third retest, which will finally confirm this level of support at 568, creating this digestion that has gone all the way back to September. And I think that will be good for the market. We would be giving back the Trump gains that we got. And for all reasons, I think this level will be good for us buyers to pay attention to for the opportunities ahead. So if we do catch this particular bottom on the market, let's say the market bottoms out somewhere around here and we get the right proper candle, then this could send us all the way towards the 640s and the 650s for all we know in this bullish channel. Now let's go take a look at the weekly chart again, team. This is the weekly chart. So we're really not doing too bad. We're not doing too bad. It does look bearish. However, heading into this week, that's when I think that's when we'll get a lot. Matter of fact, not just this week. I think this week, the market can continue to get more weakness and more downside. However, heading into January 20th, this is when things are going to be different. I think the sentiment will be different, and we'll likely notice that on the smaller time frame, that'll end up morphing into the bigger time frames again. So that's my analysis for the S&P 500. And the way that I have been trading it is I've been buying next week expirations out every time. So for that prior week, I ended up buying a SPY next Friday put, and I bought a 580, and I made around 300% on that trade. So it was really, really good. And you can also do that heading into this week. We're going to do that, and I'll continue to share my thoughts. I wasn't too confident in the prior week because of the short trading, and I did not want to tag our team, but I did share all of my trades in the chat room for anyone that was active at the given time. So team, what can we do once we get down to the 568? First of all, before we think about the short opportunity on this momentum, I would like to give you some good contracts that you can possibly pick up that can be a really good opportunity after Trump's inauguration. So let's take a look at the 615 call. So the 615 call is currently trading at 3.0 for March 21st, 2025 on SPY. This can be a good trade. That can be a nice, I would say, although it looks like a 20 to, I was sorry, 5 to 1, I'd just give it a 3 to 1. I'd say this trade is a 3 to 1, and it can be a really good opportunity. So keep that in mind if we do go down. Matter of fact, sorry, let's rewind a little bit. The market is at 580 right now. So once it goes down to 576, let's see, 574, then we don't even have to buy the 615. We can go to the sorry, 615. We can look at the 605. The 605 call at that time will probably be the same premium that this particular contract is trading at. So we're going to take a look at the 610 call expiring in March 21st, 2025. Once SPY does drop to the 576 level and we start to sense momentum on it. So far, so good, team. If we do buy this contract, you don't have to worry about the market. If the market did drop lower, you don't have to worry about losing like 70%, which is what really happens with the short term. So taking this approach, I think this can be a really great one for this particular scenario right here. Now, let's take a look at what the short-term experienced traders should do heading into this week. Like I said, you're going to be shorting, and the way that you can be patient and not really stress things out by using very short-term expirations like the 0 DTEs, the 1 DTEs, and so forth, you can give yourself next Friday expiration. So instead of buying this Friday's expiration, buy next Friday expiration. So let's take a look at when the next Friday expiration is. We're currently, so that's going to be on the 27th. By the way, team, take a look at how well things are lining up. So we have one more week before Trump. We have a 5-day session before Trump. And then on the 20th, once the inauguration event begins, I think this will very well align with the market really getting some nice reaction there that can get that rebound up. So it just feels like the market is lining itself up towards that transition. So for short-term traders, we can buy January 20th. So wait a minute, team. Why isn't there January 20th here? Am I missing something? Is the market closed on the 20th? Oh, it's on the 24th, Christopher? The inauguration's on the 24th? Oh, okay. I see. So the market really has a lot of time. The market really has a lot of time. I see. Okay. Yeah, the market definitely has a lot of time. So you can see why the charts look the way they look, team. We definitely have a lot of time before that event, which can really get that prophetic test in. It's very, very healthy for the market to get these kind of movements. And just being aware of it as a trader is really, really good for us because it prevents us from taking unnecessary trades on the call options that are currently in the contraction phase where they're giving back their gains that we got over the months here, and they're going to their normalcy prices. So once they go back to their normalcy prices, we pick them up and we're just going to be up 40 to 60% on very long-term trades within just a snap of a finger. So this opportunity itself is going to be very exciting, and I'm honestly looking forward to it. Oh, 2 weeks for expiration is Friday the 14th. Okay, so thank you so much, Christopher. That makes sense. So team, we're going to take a look at the 24th here. And let's see. So our target, whenever you're buying a put option, let's say you're trying to take advantage of a job, make sure you give yourself enough time and you allow yourself a certain strike price that can potentially go in the money. This is important because once psychologically, this is how the market makers price in the options premiums, like the IVs and all the good stuff. And this is where you'll find very, very saturated open interest, showing that there are a lot of buyers that are in those positions and expecting those levels. So if we take a look at the 565 level, this is where the levels of support are. And as we can see, there are large concentrations of holders in those levels. So you could pick up the 570 put at 3.0 or something, and I think that will be a good trade. That will be a good trade to take advantage of the downside there. January 20th is inauguration date and Martin Luther King Jr. Day. Market will be closed. Oh, wow. So market's closed on the 20th. Okay. Thank you so much for clearing that up, team. Very, very appreciated. Awesome. Okay, understood. Okay, so the market is going to be closed on the 20th. That means we're going to have to prepare ahead of time. We're going to have to buy on the Friday before, okay? We'll pick up options. We'll pick up some trades, some swing trades, of course, giving ourselves the value of time because that's very important to us, as those of you that are part of the mentorship know. So we're going to prepare before the 20th. We will buy some trades on the 24th. So yeah, let's see how it goes. From the 21st, it's on the 20th. So sorry, we're gonna have to buy on the 17th. Yeah. So heading into the end of this week, if we are near the 568 level, we're going to buy the bloody day on Friday. All right. If Friday is bloody, we're going to buy the bloody day on Friday. Perfect. All right. So now let's move on to another chart. So far, so good, team. And why are we paying attention to this particular level as well? Because this breakdown was with strong volume. So as long as 583.92 rejects, and team, I beg you, when we talk about these things, I want you guys to remember the levels because this is all the algos are about. Like 90% of trades in the market are algos. So they depend on these levels, and the levels are very dynamic, which means if you regain it, bulls are going to turn bullish. If you go back down below it, bears turn bearish. But bears turn bearish. But the most important part is the context itself, because if the market goes back to bearish after we have given back that level, what are the implications of that? Well, let's take a look. We have been consolidating here in a bear flag descending wedge formation, and it just seems like we're gonna go down more. So if we do lose that level, I assure you the momentum is going to be very strong, very, very strong, not even fast enough for us to react to. So it's key that you do not become hesitant and you trust the level. All right, you trust the level. If you see it losing it, especially like you'll see it once the level is lost, it'll be, look at that team. I was just about to show you that when the level is lost, they're going to be very, very clear, very clear how they're going to take it down. And you can see the reactions off of that level. It was just very, very bearish. So big bearish supply breakdowns. So pay attention to that. All right, team. Now, if you take a look at how it was holding as a support, you can see it just was holding really, really well, defending it really well, showing that bulls really want to hold that level and turn it into support. But now it just seems like things have changed. We're now rejecting it and heading lower. So if this does end up in a double bottom fashion, let's say we rebound back up, even if we fill the gap at 589 and we reject that level of resistance, I will probably still trade that. The reason why is because we all know how volatile markets have been. And if this volatility does really expand like that, it doesn't mean that the market will go up. So we will be ready for that, okay? Because this will be a zone here. This will now be a supply zone, and it's going to be hard for the market to break down from. So if we do come back up here, things have changed now. We're in a downtrending market, as we can see here, and therefore that can lead to more downside. So even if that happens and we get the right bearish supply bar candles, we will potentially take that bearish trade on it. As you all saw, Rainbond traded UVXY and made some really nice profits for the team there. If you have been attending our sessions, or you have been watching, you have been paying attention to our narrative, you know that we have been expecting some these type of corrections here and keeping our team out. We have been trying our best to keep our team out. I even took a 2-week break just heading into the new year so that the team can really stay out of the markets as much as possible. But I was happy to see this from Rainbond. Very, very beautiful. She bought 50 shares of UVXY at 20.10, and she said leave room to average down. This was on the 18th, so she bought UVXY on the 18th. 18th, where are we? So she bought it on the 18th right here. Oh my goodness, that's a golden entry. So she bought it on the 18th right there, and we got this massive spike. We went from 20 all the way to 29, and I believe she may have sold. Let's see. So she picked them up. Looks like she's been trading UVXY back and forth, team. She's been trading it back and forth, looks like. So she bought it back on the 30th. Okay, see, she sold it on the 20th. So on this massive supply bar, looks like she sold it there. And she bought back in once we did go down with this massive bar here, and got back in on the 30th. So on the 30th, got back in right here. And yeah, that's another $3 added on that. And I believe she sold it. Oh, she averaged down at 20 again, with the new average cost being 20.26 and closed at 23.70. So you can see, even with those little shares there, you can still make that much money by hedging your position just at the good times when uncertainty rises. So when the market becomes uncertain, you see the yields rising. This is happening. That's happening. That's what you do. You go into where the market inverses are. This particular option here, along with VIX, these track the put options on the SPX contracts, which is the S&P 500 index. It's basically it's known as the fear indicator. And when the fear rises, this rises as well, as we can see here. So it definitely looks like we're going to get that massive bar towards 22 to 23 again, which I will be paying attention to. That made me 460 on the option. Oh, wow. Interesting. You took an options contract on it, Charles, for UVXY? Very interesting. I see. Awesome. All right, team. So now that we have covered SPY, let's go to QQQ here. Let's take a look at tech. You all know we shared this last week, and you cannot say we did not share that, team. Right here, we shared it last week. And for those of you, I see a lot of our mentorship students here, so I'm going to just share this really quick because we're going to see it more often. And I swear we did talk about it last time too. So whenever you see a bearish supply bar, don't fall for the rebound, okay? If you see a massive supply bar like that, here's how I want you to take that into account. Pretend or don't pretend, because that's what it really is. think of that large supply bar as smart money exiting the trade, okay? Smart money de-risking the trade. And when smart money de-risks the trade, you got a bunch of smaller funds that are following these bigger money, that's in turn going to create this sort of plateau back down. So pay attention to that. And whenever you see these large supply bars, do not fall for them. Wait for the rebound and just pay attention to how they're going to break down on massive scale once we have got a good retracement back up. So we saw it here again. We saw it on that massive supply bar. And so far, it just looks like we may be heading lower, perhaps to fill this gap here at 492, which will be nice. Even if we don't go down to 492 and we come back, we come to 495, I think that will still be a good level for the bulls to step in and buy the dip on QQQ. But yeah, the reason why we stayed careful here and we shared that with our team there. I mean, team, just imagine us going bearish when the market looks so strong here and looks that strong. The reason why we have that is because we have seen it through experience. We know what happens. We know that when market is up too much, the universal law of supply is going to be overwhelming. So we saw it right here as well. The market was up way too much, scraping against the resistance level there, and that led to that downside. Let me see. I think I do remember using that term, scraping. So let's see if I did. So you can see it right here, team. This is the daily chart. I'm pretty sure I used pressing against. So QQQ is pressing against the resistance line of this bullish channel while showing signs of increasing selling pressure. The setup suggests the potential for a downside move. Watch for a break below the 20 EMA at 520, as this could trigger significant algo selling. Monday and Tuesday will be pivotal. If bulls manage to push QQQ above 530 during these sessions, the bullish case remains intact. However, a sustained break below 520 could trigger the start of a sharp corrective wave, aligning with the bearish head and shoulders and so forth, as we can see here. So far we are getting that breakdown, and now we are getting that candle breakdown finally. So are we going to pick up on that heading into this week where the selling will continue towards 495? We shall find out. But I think the chances of that happening is quite high at the moment. And then once we do drop a little bit, perhaps we can then expect some sort of rebound like this one right here that we saw. Perhaps a little bit of a rebound again. We'll see. But so far, getting a retest at 495, this is where I will take out, I will basically become neutral. Once we go down to 495 on QQQ, this is when I become neutral. So far, so good, team. Move on to DIA. All right, so here's DIA here. And DIA, as we can see, DIA has been on a correction. The Dow Jones Industrials average has been on a corrective course. And this is also playing out that job-based drop, as we can see here. So considering that job-based drop, the target is going to be anywhere. Let's take a look. Duplicate that. I think the target will be around this test at 41,200. So once we go down to this level of support at 412, I think that will be nice. That will be a nice level for the bulls to buy the dip at this 200 SMA line at the retest of the 30%, which is a buy signal in an uptrending market. I mean, everything just points to beautiful confluence there, which is why I think the dips are going to be bought once we do go down to those levels. Let's move on to IWM here. IWM did break down below its level of support. However, I think even if we go down to 209, what bulls can do is they will just eventually do something like that and come back up to their historic all-time highs. Sorry, give me one moment, team. Let me draw it so that I give you a better illustration there. Better. Oh, why can't I double that? Duplicate. There we go. So, activate. Trying to draw those candles. There we go, team. So you can see, like, if we get those two green candles, it'll just regain us that level, that bullish channel, and that will send us all the way to the 270s and 280s and so forth. So that's why I'm not really too concerned about the way that IWM looks. I think it will just be a good liquidity for us. But for now, let's focus on the S&P 500 and QQQ there. Die spy. Oh man, I think this is a perfect time, Jorge, because uh, we were quite bearish earlier. Let's see how it goes. Let's see how it goes. I am bearish as well, so I'll be chanting that in the chat room this week. All right, team. We looked at SPY, QQQ, DIA, IWM. Let's move on to some of the stocks here. Let's take a look at some of the big stocks here. We got Apple. Let me go ahead and change that to yellow and Apple. So if we take a look at Apple, Maripan actually tagged me this weekend, team. Our member Maripan, and he mentioned it because I really did. I think he may have mentioned it in was it Team's swing trade ideas? But basically, what we did was we were talking about puts. We were talking about puts, I believe, 2 weeks ago on the Sunday meeting, saying that we're going to grab Tesla and Apple puts. Chart only channel. Okay, I see chart only channel. All right, here we go. So, team, we were talking about Apple. Where is it? Apple at the very top, like right here, right here. This is where we were talking about Apple, and taking a look at it now, believe it or not, team, we caught the literal top on that. The literal top on that Apple. We didn't take the trade, sure, but we were in the right size. And just imagine, team, had we gotten to a call, that's $20 of deep ITM of intrinsic value, which is $2,000 right there. $2,000 right there, which is really, really impressive. So understanding this sort of price action, really thinking outside of the box while so many are bullish, will take you a long, long way. It will put you on a different game. And that's absolutely amazing. And the thing is, like, I have proof. One of our team members actually was there when we talked about this, and beautiful, if you ask me. That was just an absolute on point outflow that we caught from QQQ right there, from that higher high structure placement there. Now, team, when rotation flows out of tech, where do we expect it to go into? XLV, the healthcare sector. Now, the healthcare sector has not been as strong as we would like it to be, and I think this could be due to Trump's administration. There's a little bit of maybe different policies and so forth. However, we're going to continue to watch it here because we are at a level of support which can trigger some heavy upside. And I think the stocks such as LLY, UNH, J&J, ABBV also are pointing to that as well. So if I go to LLY, we can see it looks pretty good. It looks pretty good. It looks like bulls can step in and get more upside towards 810 on LLY, and maybe even get a retest of this level of resistance at 843 there. Take a look at UNH. UNH also has been getting some sort of rebound. Maybe it could go down for a potential double bottom to 500 before moving back up. J&J, J&J is a stock that we are in, and I think this looks really good. In my opinion, despite the breakdown, I think this bullish falling wedge can send J&J towards 155 in the next 2 months here. So J&J, and then we're also holding ABBV. ABBV did come down, but could get some rotation. I don't like that the TTM squeeze is not there, just like the XLV. If we take a look at the main ETF, the main sector, it just does not have the momentum. So we'll see how this goes. But when rotation flows out of tech, this is where it goes into. Now, one of our team brought this trade to us, team. I really appreciate you guys, and I love that you guys share these beautiful trade ideas with us. This trade here was shared by Charles, and it was absolutely beautiful. Let me tell you why. if we go back to our analysis, and I do want to share that whatever I got in this analysis was because of Charles. All right. So our WBA here, let's take a look. WBA, and we did reaffirm it in the prior session as well. So this is WBA here, and we talked about WBA stock, Walgreens, showing promising signs of potential breakout. The stock is currently at key level at 11. Basically, what we said was that it was going to head towards 14 to 16, get that 50% potential upside move on the stock price. And the trade setup was price action perspective. The 11.10 resistance is a critical breakout level. A sustained move above this can trigger a rally with a potential upside of 30 to 50% over the next year. Targeting 14 to 16. So our strategy was buy leap call options or outright share purchases at this current level. For those of you that did pick up these contracts, you are doing really, really well. So this trade ended up doing really well. And that's all thanks to Charles for bringing that to us. And it looks like it has a lot more room. So the stocks we looked at earlier, they did not have fuel, but if we pay attention to this particular one, we can see it is just starting its squeeze firing. So far, so good, up 27% on Friday's session, looking good. All right, so now we looked at Apple. Let's move on to NVIDIA. So team, why am I staying out of NVIDIA right here? Why am I staying out of NVIDIA after we got that level of retest at the 149? So if we go back to my weekly watch list, I shared my NVIDIA analysis just before we, let me see if I can find it. Give me one moment, team. SPY chart, QQQ, SPY. But yeah, team, as you can see, I've really been bearish for quite some time now on QQQ, targeting that level there. And we're finally starting to break down. So 595 now down to 580, 80. What are we at? Like 583 or something? So we're heading there. Oh, 580. Oh my gosh. We've come down $15 ever since this analysis here, team. We still got a little bit more room to go. So if you did buy those options there, these did really, really well. January 17, the January 17, which still has another week remaining. It's next Friday's expiration. That 584 put is already deep ITM by $4. So that's doing really, really well. If you want a cheaper contract, we said to buy the January 17 580 put instead. And that one is pretty much sitting right at the money. And also a really good trade for the traders. But make sure you always pay attention to our weekly watch list because we do share our contracts there. I do share my analysis on the Facebook community as well, but for the Facebook community, you will see me share just one sentences and that's about it. Like you'll see me share that much and nothing else. I'll share this much and nothing else. But for our Discord team, I go very, very much in detail. I talk about which candles to look out for, what kind of sentiment you should be expecting from this to kind of change your views, and whether we should get swayed with the market conditions heading into that week. So some weeks are going to be tricky. Therefore, paying attention to the key levels is very, very, very important. So in this case here, we can see for the time being, the goal is to observe the market and recognize any sign of weakness. So this particular trade was on signs of weakness, not on particular levels where the market will be, but on signs of weakness, because I expected as soon as we get weakness, we would be selling under heavy pressure. And that pretty much turned out to be the case. So these trades did really, really well as hedge positions. If anybody did take advantage of it. I was also watching Netflix and Tesla put options as well. And those Tesla did end up dropping quite a good amount. But yeah, make sure you always check out our weekly watch list. We always look out for you. You can see we shared several put options on QQQ as well. The 510 put, which is now $10, $5, $7 in the money. We also called out February 21st, 475 put, giving ourselves a little bit more time in case we do get that bigger breakdown. And yeah, just make sure you check them out, team. We always post our thoughts there. I think I did share NVIDIA as well, but I can't seem to find it. I think I may have just talked about it on the Sunday meeting and I didn't share my analysis there, but Apple clear, head and shoulders. Target is 222, 225. Interesting, Bahar. All right, team. So now let's move on to NVIDIA. Now, I want to talk about NVIDIA because the reason why I'm staying out of NVIDIA is this particular candle. This candle, that massive supply bar, which is known as an exhaustion candle. Here's another one for that exhaustion candle. That pushed SPY from 89 all the way down to 75. Not much of a downside, but this particular one did. It sent SPY from, NVIDIA from 130 all the way down to 93. This one sent NVIDIA down from 140 so far down to 136, and it could possibly send it down here. Now, I will be honest, team, for NVIDIA, I'm taking a little bit of a different approach, okay? If they do still hold this level of support at 132, I may still be a buyer. But who knows? Who knows? Who knows what happens heading into this week? Because if you take a look at NVIDIA for the first time ever, I am seeing NVIDIA showing signs of exhaustion, which is very, very rare. If we take a look at the TTM squeeze here, when we are above the resistance levels, in most cases, we got the TTM squeeze just ready and right at the doors of resistance, right at the fortress of the enemy base, ready to break out, ready to pretty much tear right through it. And this time, we just don't have that momentum. So gotta go. There's a fire that has just started in Northridge. Oh my goodness, Miss Ann, I'm so sorry to hear that. But yeah, team, that's enough. That's honestly enough for me for today. Just wanted to I do have an announcement though. I do have an announcement, but for my analysis, just wanted to share my bearish views heading into this week, thinking that the market is going to continue to head lower for one last week here before we move on, before we transition to the new administration, where the market can have, I quote, a fresh start. All right. So you're going to see a lot of things such as, the yields are going all volatile and so forth. It's probably just rotations, inflows and outflows, just relocations of funds going around. But very likely by January 20th, you will see yourself, things will look different. So we're going to see January 21st, come January 21st and so forth. Let's see how that goes. Bahar, here's the thing. The Fed also wants, so Bahar said, really wonder how it's going to go with Trump and Powell. Trump wants more rate cuts, and will Powell do it? He has to. Here's the thing, team. Do you guys remember back in 2022, we used the same narrative. We used to say that the Fed is BSing and that they're going to pivot. They are BSing and they're going to pivot. I think it might have been the end of 2022. And we were saying the reason why is because the Fed has kept rates, or was it 2023? Yeah. We said that the Fed had kept rates in place for 2 years and the damage was significant. So in this case, I think the Fed is doing the same thing. If the Fed were to say, "Oh yeah, we're going to cut rates and so forth," I think the economy itself will start taking heavy risk to try and be part of that. But if they keep a rough tone right now and pretty much confuse everybody and try and make it seem like they're going to be aggressive on the rate cuts. Not going to be cutting rates. They're going to be slower on the rate cuts. I think that's really going to keep the markets grounded, keep risk grounded, keep the economy in a quantitative tightening until eventually they will announce once inflation continues to come down, where everyone thinks the Fed is going to keep rates higher longer. That's when they will start doing the rate cuts and aligning with Trump and pretty much everything that the economy is setting up for post pandemics. That's my thoughts, Bahar. I think that's what the Fed is going to do. So they have to keep that rough tone at the moment, but then they'll come out in a couple of months and just continue their rate cut procedure. unless Trump dials back their crazy talk, the market is not going to rally like before. Interesting. With the market at all-time highs, I think what they are doing now provides us a good correction, 5 to 7%, which is way past overdue. I really agree. And Bahar, I think the Fed, here's something that many investors may not be thinking about. I think the Fed is getting that picture as well. And they are noticing the reason why they're not afraid of a market crash at these levels is because they are expecting the markets to expand by enormous amounts. Like I'm talking about the S&P 500 going to like the 700s and so forth, the 700s and 750s, believe it or not. And I say that I mean, I don't want to predict things ahead, but just on a long-term fundamental perspective, the market has a lot of room for growth. Um, there's so much innovation that has yet to come from AI. We are currently in the early stages, and there's so much that can be generated from this wealth wise. And not just that, there's other like every day we are finding out more wealth under some country or under some place that's with today's ever evolving technology going to provide more wealth to countries and to nations and the world in general. So I think that is going to add more wealth to the economy, and we will see that expansion over the next 50 to 100 years. So we'll see how that goes, but that's honestly my thoughts on where the market will go to for the upcoming years. I mean, think about it, team. The healthcare sector is going to be, pretty much out of this world in a decade or so. And there are other sectors as well that are going to experience the same sort of renaissance growth through technology and AI. That's my thoughts, honestly. Also, keep in mind, team, the differences between the old, the back then, like 200 years ago, and now is that the people are growing at an alarming rate. I mean, we got 8 billion people, which is a sheer 6 billion difference from just 200 years ago. That's my thoughts. Like honestly, sometimes I think about that and I feel like because of the amount of people we have on Earth, it may be more difficult for wars to break out. I mean, don't get me wrong, there are some horrendous things happening in some parts of the world like Ukraine and Israel and Palestine, but overall the world is still in a better times than we were in history with so much happening. That's my thoughts, honestly. So that's another thing that I think can benefit the upcoming years because things may slow down a little bit. We'll see. But for now, team, I do want to give you one announcement before I go. I will announce this in the Discord as well. We are getting another admin joining us. And I'm very, very excited because this admin means the world to me. It's going to take a little bit of time for him to adjust. So I really hope the team gives him time to adjust. But just know that this person is the one that got me into trading. And he's one of those traders that knew about credit spreads, about debit spreads, about whatever you can think about in the options realm in 2018, far before many got into the market after the pandemic. So this guy is an OG before the term OG was even invented for traders. I'm trying to make a joke here, but Mario is a dear friend of me. He taught me how to trade, and there were a lot of things that through my experience over the years that I noticed that he was doing at the time that made perfect sense to me, but I questioned, or I kind of for example, I'll give you an example. I was like, when it came to risk tolerance, I was like, oh my God, how come you're closing your position here, Mario? You're being scared. That's just in my head. I'm like, you're being scared. But guess what? It came out that as I grew as a trader, that's what you are supposed to do. You are meant to keep your risk tolerance in check, because just like any other thing, if you, let's say, if you drink or if you smoke, whatever you do, if you take risk, you are going to grow your risk tolerance more and more and more, and that's really bad. You do not want to extend your risk tolerance. As soon as you get used to that, oh my God, team, I have a new term, just new term. I don't even know if it's a term or not. I typed it on Google to try and find it, but it wasn't anywhere. Detolerization, detolerate the trade, just go into a detolerization and just literally back off that week. If you took risks, back off that week and just kind of detolerate that kind of risk that you took, so that you're not tolerating it. I see Dali said descent. I don't even know how to say that word. I'm so sorry. Desensitization. Okay. But team, Mario is going to be joining our admin team. I'm very, very excited. He'll be our fourth admin, and I have some really, really great vision for us, and I hope it goes the way that I expect it to. You guys try to ask him questions, try to get him involved, try to get him out there. Anyone remember Mario? Anybody remember Mario from day one? Has anybody here out of these 35 traders that are with us that actually knows Mario from maybe day one, like from way, way back? So let me give you a story. Back in 2019, we launched a Discord. Mario and I launched a Discord, and at the time, we had a very small amount of traders in there, but we were charging $100 per member per month, and I was so against that. I mean, $100 per month, 2 months, you can buy my mentorship. That's literally a lifetime. So personally, I disagreed with that. And that's why when Mario went on to pursue his career, I ended up reducing the price to $17.99, and I kept it that way. I did raise it just a couple of months ago to $29.99, but yeah, before it was $100, and we were doing phenomenal. Like, we were doing really, really well. Mario's just such an amazing soul. He's always looking out for the best. Team, just trust me, we're going to love Mario. That's all I'm going to say. It's I'm very, very excited. It's going to be very fun. It'll take him a little bit of time to adjust because he's just coming back to trading, but once he's used to it and he's sharp, we have some very, very powerful admin on our team that you can depend on, that you can conversate with, you can chat with, ask questions, ask for advice. It's just going to be amazing. So team, that's enough for me. I hope you enjoyed today's session. I hope you got the assignment from today's session. Without wasting your time more, I hope you have a wonderful rest of the day. Take care. See you tomorrow.